Welcome back to EcoBiz Academy and the Complete Accounting course. In Chapter 2, we learn about the books of prime entry and how different transactions are first recorded.
And now we're taking the next step.
Exactly. Today we're going to see how information from those books is transferred into the ledger accounts. This is Chapter 3, the ledger accounts in detail.
Let's start with the basics. What exactly is a ledger?
A ledger is a collection of the individual accounts used by a business. For example, a business might have purchases account, sales account, purchases returns account, trade payables accounts, trade receivables accounts, vehicles account, and many others.
So the books of prime entry record transactions first, and the ledger organizes them into accounts.
Exactly. Remember what we learned in Chapter 1. Every ledger account has two sides. Debit on the left, credit on the right. The entries must be made according to the double entry system.
And we also need to show where the entry came from.
Correct. Ledger entries normally include details such as a date, description, amount, and the ledger folio or reference. This allows transactions to be traced back to their source.
So how do we actually transfer information from the books of prime entry into the ledger?
Let's use an example. Suppose during the first week of October, a business has several credit transactions. It purchases goods from suppliers. It makes credit sales to customers. It purchases a vehicle, and it returns some goods to the supplier. Each transaction is first recorded in the appropriate book of prime entry. Then the information is posted to the relevant ledger accounts.
So the books of prime entry are basically giving us the information we need to prepare the ledger.
Exactly. Let's work through some of the transactions. On October 1st, the business purchases goods for resale on credit from Arkham PLC for $120.
That's a credit purchase, so it goes into the purchases journal.
Correct. When posting to the ledger, debit purchases $120 and credit Arkham PLC $120.
Then the business purchases a vehicle on credit from Pulley Motors PLC for $17,400.
This is important. The vehicle is not goods for resale, so it doesn't go through the purchases account. Instead, debit vehicles $17,400. Credit Pulley Motors PLC, $17,400.
So we have to understand what was purchased, not just see the word purchase.
Exactly. That's a crucial accounting skill.
Now we have a return. The business returns damaged goods worth $38 to Arkham PLC.
Good. This is a purchase return or return outwards. The transaction is recorded in the Purchases Returns Journal. When posted to the ledger, debit Arkham PLC, $38. Credit Purchases Returns, $38.
So Arkham's account is reduced because the business no longer owes the supplier that $38.
Exactly. Now here's why all this posting matters. Once the transactions have been transferred into the ledger, we can see the individual balances. For example, the account for a supplier can show how much the business owes that supplier. A customer account can show how much that customer owes the business. The purchases account shows the relevant purchases. The sales account shows sales.
So the ledger turns the individual transactions into useful account information.
Exactly.
The example also has different types of ledger accounts.
Yes, we can have accounts such as purchases account, sales account, purchases returns account, vehicles account, and individual accounts for suppliers and customers. For example, Arkham PLC, Bjorn & Co., Morris & Co., Nelson PLC, and so on.
So each customer or supplier can have their own account.
Correct. This makes it possible to keep track of individual balances. There's another small detail that students sometimes overlook, the folio reference.
What's its purpose?
It helps us locate the corresponding entry in another accounting record. So when an entry appears in a ledger, the Folio reference can help trace where that entry came from.
Basically, it creates an audit trail.
Exactly. It makes the accounting records easier to check and follow.
Let's go back to the vehicle purchase because that could catch people out. If a business buys something, does it always go into purchases?
No, that's one of the biggest traps. Purchases refers to goods bought for resale. If a business buys a vehicle for use in the business, that's an asset. So a vehicle purchase will be recorded in the vehicle's account, not the purchaser's account.
So always ask, why was the item purchased?
Exactly. Let's quickly cover some common mistakes. Mistake 1, putting every purchase into the purchaser's account. Remember, purchases means goods bought for resale. Mistake 2, confusing sales with cash received. A credit sale creates a receivable. Mistake 3, forgetting that returns affect a supplier or customer account. Mistake 4, posting the debit and credit to the wrong sides. Mistake 5, ignoring the folio and transaction details.
So accuracy matters even with the small details.
Absolutely.
Time for a quick practice question. A business has the following transactions. 1. Goods purchased on credit for $2,000. 2. Goods sold on credit for $3,000. 3. Equipment purchased on credit for $5,000. 4. Goods worth $400 returned to the supplier. Required. State the ledger accounts that should be debited and credited. Pause the episode and work them out yourself.
1. Credit purchase. Debit purchases $2,000. Credit supplier $2,000. 2. Credit sale. Debit customer $3,000. Credit sales $3,000. 3. Equipment purchase. Debit equipment $5,000. Credit supplier $5,000. 4. Purchase return. Debit supplier $400. Credit purchases returns $400. Let's recap. The ledger contains the individual accounts of the business. Information from the books of prime entry is posted into these accounts. Remember, credit purchases, purchases account and supplier account. Credit sales, a sales account and customer account. Purchase returns, purchases returns account and supplier account. Asset purchases, the relevant asset account and supplier account. And always remember, debit and credit must remain equal. And that brings us to the end of Chapter 3. If you found this episode useful, subscribe to EcoBiz Academy and comment below with the part of ledger accounts you found most difficult.
And if you have a question, leave it in the comments.
In the next chapter, we'll move on to the cash book and look at how cash and bank transactions are recorded.
See you in Chapter 4.